Hey guys, it is Julie here with TipRanks, and today we're taking a look at 3 stocks that top analysts have a 100% success rate on. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we are utilizing one of my favorite features on TipRanks, and that is the Top Experts page. Here we will find a list of the best performing analysts on Wall Street. We can see details on their performance, plus a list of their recent stock rating activity. So today we're taking a look at 3 stocks that are all in the oil and gas industry, and these top analysts actually have a 100% success rate on. So we'll see what these companies do, how their stock has been performing, and how the rest of Wall Street analysts weigh in on the stock's future potential as well. Don't forget you can follow along over on the TipRanks website or by downloading their TipRanks mobile app, where you can access all of the wisdom of these 8,500 analysts. Links will be in the description down below. Now let's get right into these 3 stocks. So we're taking a look at the top Wall Street analysts, which can be found under this top expert section here at the top. And down below, we'll get our list of those best performing analysts. We're going to start off with Scott Hanold from RBC Capital. He's currently rated number 6 out of over 8,500 Wall Street analysts. And Scott recently reiterated a buy rating on Northern Oil and Gas. Scott has rated the stock 67 times before, and when we look back at the last couple of years, 27 out of 27 ratings were profitable. His average return for the NOG stock is an impressive 49%. Trading under the ticker NOG, the stock is currently priced at $39.44 per share. They've seen growth of over 20% in the past year, including growth of 7.5% in the last 3 months. Northern Oil and Gas does also pay a dividend, with a current dividend yield of 3.52%. Northern Oil and Gas is an exploration and production company operating in 3 of North America's most important hydrocarbon production basins. These include the Williston Basin of Montana and the Dakotas, the Permian Basin of Texas and New Mexico, and the Marcellus Formation of western Pennsylvania. Northern has made the best of its strong holdings and operations in these rich hydrocarbon regions. Of the company's output, about 60% is in liquids, mainly crude oil, but also including natural gas liquids, while 40% is natural gas. They'll be sharing their next quarterly report here soon on November 1st, and this follows their last quarter where they did have an earnings beat and saw record quarterly production. For their Q3, analysts will be looking for earnings per share of $1.72, down slightly from the previous year. In the last quarter, they reported earnings of $1.49, beating analysts' expectations, and net income of $167.8 million. They saw record quarterly production of over 90,000 barrels of oil equivalent per day. Now we know that top analyst Scott from RBC recently rated the stock a buy, but that is not the only top analyst attention that they've attracted. They've also heard from Truist financial analyst Neil Dingham, and he's a top analyst that we're going to look at again later in this video. He recently weighed in on the Northern Oil and Gas stock. He noted that Northern is in a unique position after completing several what they consider to be accretive acquisitions, seeing baseline production improve, and having a solid balance sheet. They said that the company is in an enviable position of being the largest non-operated E&P, uniquely positioned for any future accretive deal. Overall, the stock does come in as a strong buy with 8 current analyst ratings. With 7 buys and 1 hold, the average price target comes in at $49.25. That would be an upside potential of 25% from current prices. Down below, we can see our 2 top analysts here with Scott and Neil. Scott gives them a price target of $46, which would be an upside of 16%. Neil feeling a bit more bullish with an upside of 44%. The rest range around there from 11% to 36% upside. Now moving over to our next top analyst, like I said, Neil Dingham from Truist Financial. He currently holds the spot of the number 1 ranked analyst out of over 8,500, with a success rate of 80% and average return of over 32%. And he's had a lot of recent buy ratings coming in, one of those being Permian Resources. He's rated the stock 32 times, and looking back the last couple of years, 11 out of 11 ratings were profitable for a 100% success rate. His average return on the stock has been 41%. Trading under the ticker PR, the stock is currently priced just above $15 per share, and they've seen some pretty big growth this past year, up 60%, including recent growth in the last 3 months of 34%. They currently score an 8 out of 10 on the TipRanks Smart Score and do pay a dividend with a current yield of 1.33%. Permian Resources is a hydrocarbon exploration and production company operating out of Texas's Permian Basin. Permian Resources is a pure-play operator in the Delaware Basin, boasting over 180,000 net acres, which includes some 40,000 net royalty acres. The company produces over 137 million barrels of oil equivalent per day. Their next quarterly report is coming up on November 7th. This follows their last report in August, where they did have mixed results. Though revenue did grow year over year, they did miss on earnings. Revenue of $623 million did grow 32% year over year. However, their earnings per share at 21 cents did fall short of expectations. For this next quarter, analysts will be looking for earnings per share of 39 cents, which would be a big increase quarter over quarter, but a decline year over year. Just over a week ago, our top analyst Neil Dingham actually increased his price target on the Permian Resources stock, and he's not the only one to do so. An analyst from Susquehanna also did the same. The analysts updated their estimates for the exploration and production sector ahead of Q3 reports, saying that companies continue with their maintenance capital programs, with improvements in well productivity driving modest production gains. The PR stock does currently come in as a strong buy with 13 analyst ratings. That breaks down to 10 buy ratings and 3 holds. With an average price target of over $17, that would be an upside potential of 14.75%. Down below, we can see our Susquehanna rating increased to $16, but a hold with an upside of 6%. Our top analyst Neil here feeling a bit more bullish. His price target of $20 would be an upside of 32%. And looking further back, we have a lot of ratings from a few months ago following that last earnings report. One with a downside of 7%, but a buy rating. So we've surpassed that price target, and I'm sure we'll see a lot of these update following that November quarter. And for our third stock, we're actually sticking with Neil as he has another company with a 100% track record. And that is on Chord Energy, who he just reiterated a buy rating on the 16th. Now he has 17 out of the last 17 ratings being profitable, with an average return of 29% on the Chord Energy stock. Chord Energy trades under the ticker CHRD, currently priced at $170 per share. They've seen growth of 22% over the past year, including growth of 13.5% in the last 3 months. They score a 10 out of 10 on the TipRanks Smart Score, and yes, we have yet another dividend with a current yield of 2.93%. Chord Energy is another operator in the Williston Basin in the Northern Plains, primarily in North Dakota. With approximately 963,000 net acres of holdings, Chord is a major player among the region's oil and gas producers. With 4 rigs in operation, they're using unconventional methods to release oil from the underground reservoirs. A majority of the company's reserves are comprised of oil, some 57% of them, with much of the rest being natural gas and natural gas products. They'll be sharing their next earnings report next week on November 1st, and this follows their last quarter where they did see revenue grow year over year and beat estimates, but earnings did miss. Their Q2 revenue did come in at $912 million, which grew over 15% year over year, while earnings per share of $3.65 did fall short. Now, this quarter coming up, analysts will be looking for earnings per share of $5.08. That earnings miss did not worry our top analyst Neil Dingham, who was more focused on the company's free cash flow. He said that Chord continues to produce some of the strongest back-end wells, driven by a combination of improved well spacing, extensive analogs, efficient drilling and completions, with other hosts of improvements. The result has been consistently improved well returns in most of their key areas, resulting in notable free cash flow that allows for material shareholder return. And just last week, he did increase his price target on the Chord Energy stock. He is one of 8 analysts that all have buy ratings. That strong buy comes with a price target of $191, which would be an upside potential of nearly 13%. Down below, we can see Neil's rating coming in at $225 for an upside of 32%, and he has a high-end price target here. On the low end, we do have a buy rating with an upside of nearly 4%, several around that 8% mark, and a couple above 20%. So there we have 2 top analysts with 100% success rates on these oil and gas companies, and other analysts seem to agree. So let me know your thoughts in the comments down below. Which of these catches your eye, and what other top analysts do you love to follow along with? I always appreciate hearing from you guys. Of course, keep in mind these videos are never a suggestion to buy or sell any specific stock, just keeping you up to date with what these analysts are looking at. So please make sure you always do your own research and due diligence and stick to your own investing plan. Thank you guys so much for watching. I hope you have a great day, and I'll see you back here next time.